me do this. I need to do the magic. Yeah, this is live. So let me do the magic, the final magic for this. Yes, yes. Now set up for X. Just give me a few seconds and we are gonna go live for all over the world.
Great.
Yes, now it's okay. Let me adjust one thing. Yes. Let's see if on X we are with sound as everything is going good.
Yeah, I think it's live. Yeah.
Yeah, it's live.
Yeah.
Let me check. Yes. Finally, we are live. Hello, this is the Bitcoin Libertarian. I'm here with Diego.
Hello.
And on the other side of the sea is Batistoshi. How are you doing, Marco?
I'm doing great, guys. Very happy to do another episode together. We have a lot of things to discuss. So, yeah, let's roll it.
Yes, we have many things to discuss. We are here in Bitcoin Treasury Company report. And let's start with Michael Saylor and strategy. So I heard that Saylor was not going to buy any more Bitcoin. He was buying few Bitcoin, like 500, 200. And now, since a couple of weeks till now, he is buying Bitcoin as if there was no tomorrow. What do you think?
Yeah, I'm just sharing here the strategy website so that we can see the last data, especially the 3 acquisitions that they made in 2026, which was number 93, 94, and 95. So for 95 times strategy did Bitcoin acquisitions. And as we can see, the numbers are pretty staggering, are pretty insane, because they just started very casually with 1,000 BTC on the 5th of January. Then they 10x it with 13,000 on the 12th. And then last week, they have one of the greatest purchases of Bitcoin, I would say, maybe top 5 on their history with more than 22,000. People still complain that most of those Bitcoin came from the ATM of MSTR, but we can also see that Stretch is now taking percentagely, like a large percentage week over week. The product has been amazingly stable around 100. And so strategy can literally push more shares of Stretch to buy Bitcoin instantaneously, to give more BTC per share for the common shareholders. So I think they will try to adjust this ratio. But I think what we are seeing over the last weeks for 2026 is that Stretch is a beast, and they are probably going to buy much more Bitcoin than maybe all of us expected from those preferred, mainly from Stretch in 2026, which seems to me like very bullish and very great.
Right. One of the questions were, if they can now raise money through Stretch, why they keep hitting the ATM on MSTR? And as far as I understand, it is because they have a limit. It has to be a percentage or something like that of the amount of Bitcoin that they have in the balance sheet, or how big is MSTR in general, and the amount of STRC that they can actually issue. So if they would just ATM based on Stretch, they will reach a limit at some point where they cannot issue more than that. So they are doing both because they are first raising more money through MSTR because it's just a bigger volume, even though with the MNAV very compressed at 105 or something. But that allows the cake to become bigger so they can issue more stretch, which eventually will allow them to issue more stretch ATM now to buy more Bitcoin. So both things are necessary part of the strategy now. But did you know, Marco, how is exactly the mechanics between the amount of stretch that they can issue compared to how big is MSTR actually?
Yeah, I think this point, I mean, it's a very valid point, and it was brought up by, I think, the folks from MSTR True North. I think the whole point is to have, for all these preferred, a certain level of over-collateralization with the Bitcoin. So if they, for example, just do the ATM on stretch for the next months, and so they can add, I don't know, like billions of dollars on BTC only by issuing stretch, the overall over-collateralization of all this product might go a bit below the expected amounts that strategy has in mind and all of the prospectus of those instruments. So I think you're right, Diego, in the sense that if they want to use a lot of stretch ATM, they also need to have a proportionality with MSTR ATM. I'm pretty sure they can, as of today, with the data that we have and with the amount of balance sheet that strategy has, I'm pretty sure they can just go with STRC for a long time and still respect over the over collateralization. But I also think that Saylor still see Bitcoin as the biggest asymmetric bet in the market. For him, it doesn't make sense that Bitcoin is still at 90,000. He already foresee Bitcoin probably like 500,000 or 1 million. So he say, as soon as I have this small premium on my equity, I don't care. I just want to buy as much as possible because he knows that is a very long-term game. And again, if he can reach this like the one Nakamoto stack or even more, I mean, it will start to become a sort of monopoly on digital credit, and it will be like for him like the ultimate goal. So I think it's like the narrative is part of the over collateralization. So they need to MSTR to keep balance the ratios for things, and they want to buy as much as possible in every possible occasion.
Yes, I think that Saylor, he understands what is going on in the world. That's why he's in a hurry to keep buying Bitcoin. Every time he speaks, he does the projection of Bitcoin price, and he talks about huge numbers. And I think that now what is happening in the world with gold and metals going parabolic, I think that I always say the same. Gold and the precious metals are the canary on the coal mine. So if they are going parabolic, I think Bitcoin will soon go parabolic. So I think that's why Saylor wants to reach the Nakamoto level just before Bitcoin price go crazy, so he can move to the second part of his plan, that is become a Bitcoin bank. I think that is the point. This is what I think. I don't know if it's crazy or not.
He said no during the podcast with Danny, but I think he doesn't like the classification as a bank, but as a function, I would say that is becoming a sort of bank, a different one. But yeah, maybe he doesn't like the label bank. But yeah.
He actually say he don't like the categorization as a bank because he doesn't want to compete with JP Morgan. Doesn't need to. So it's a different. It's more about the creation of credit lines and products that allow you to have a bank account with the yield. So the other point is that I wanted to analyze. It's this site stretch.live. It's doing a quantification of all the volumes and the inflows of stretch week by week. So in the previous week, they got it pretty much right. It's kind of like an estimation, right? Because you can set the parameters over here. Mm-hmm. But in the previous week, they estimate that with the amount of inflows going into stretch at the values that stretch was trading, which was all the time over par on the previous week, except for the last day, which was 99.99. based on these parameters, they were estimating that they will be able to buy around 2,200 Bitcoin only with stretch, and they get it pretty much accurate. I think the right value was something like 2,500. For this week, we have on the first 2 days of the trading, we have Bitcoin going down thanks to Trump again. And eventually it brought the price of stretch down to 99.12 on Wednesday, here,
Yeah, Wednesday.
and 99.55 yesterday night. So the question here is, now we see that even a big fluctuation of the price of Bitcoin, like 5% that was given during the weekend, brings the price of stretch around 0.5 to 1% down. So the point is, and this is also related to the volume, right? The actual volume allowed this volatility. But what happened when this product keep increasing year after year after year, billions and billions and billions coming? What I'm expecting is that this number, the 99.5, becomes something more tight, like in between 99.90 and 100.2. So the fluctuation will be very much tight, which will make it look like a stable coin or like a currency that is tight, like the Hong Kong dollar, for example, that is flotating between these two bands. And this will be allow the tightening of this margin by the amount of inflows coming in, and also it's a factor of the volatility of Bitcoin, right? But how do you see that happening, that this product at the end of the day will become very compressed into the 100 zone?
Yeah, Diego, I think it's why it reminds me the first year. Remember when I started my journey, a lot of people say, Tether is depegging, Tether is going, and sometimes at the beginning it was like going from 1 to 0.95, then maybe back to 0.99, then maybe stayed there for a few months, then there was another kind of big correction. But then if we go now to see USDT over the last probably 5 years, the largest depeg that they have was like 0.993, 99.2, so almost nothing compared to the beginning. So I think similarly, Stretch will have a similar behavior in the sense that it's still very young. It's still a lot of traders want to even try to trade the premium that they had at the beginning when they started to buy it. And so it is much more, kind of volatile. But over the long term, if we assume this product will be with us for the next 5 years, and maybe the volume, the total volume of Stretch will move from 3 billion to, I don't know, 20 billion, for sure the price will fluctuate much, much less. And I think I agree with you, it will be in a very, very tight range, probably oscillating around the $100. And so it will become effectively a sort of stable coin, non-stable coin, but the value will be pretty much stable, and it will be one of the best products, because as a consumer, I want to have the stability on Stretch plus the dividend, and the strategy as an issuer, I want to be on the 100, so I can sell new ATM on that instrument without affecting the price, but still able to raise capital. So I think the analogy is very, very on point.
Yeah, another point, it's that nowadays, not nowadays, but since decades ago, people has been buying S&P or Nasdaq, any of the big index, because of this feature where you're gonna have the returns of the whole stock market in something around 10, 15% with the low volatility, right? So that would be the one kind of a safe bet. But now if you have this product that allows you to have a lot less volatility, if effectively the system can compress this into the 100 zone, but it will pay you a very stable 11% return, then what is the need to keep investing in the S&P? Couldn't do all this inflows from the S&P go straight away into stretch?
I mean, for our side, it seems so obvious. For our side, it seems like even more technically sound and more secure to have a product like Stretch that delivers an 11% dividend rather than buying the S&P index. But again, financial markets and the like hundreds of millions of people that invest in financial market as retail, they have almost not even any idea about how financial market works, and I mean, and even probably less of a specific instrument, and totally almost zero for Bitcoin and any kind of preferred offering. So I think the thesis is correct, Diego. The only probably problem right now is that the asymmetry is still very huge, and we have still majority and the large majority of the population that is completely unaware of Bitcoin, and so more risky product as vehicles because their financial analyst buys for them because they don't have to put much effort into studying a new paradigm shift or a new asset class or new set of products. So I think it will take much longer than we expect, but ultimately, why having an index that pays you 7% with higher volatility rather than having a Stretch that pays you 11% almost without any volatility? It makes no sense. So the market will take time maybe to realize.
And I give you one more important point I think is going to happen, which is it's expected that this year we have a lot more rate cuts from the Fed, especially when Jerome Powell gets released from this. So what would be the effect of a new cut rate on the inflows into Stretch? Because now you're making the return from that 11% into the new standard. Let's say if we go from 350 to 2.5, well, you have this product is paying you 11, so you're making the returns even bigger. So it will make the product more attractive in the future while rate cuts keep coming in.
Yeah, it will be even more appealing. It will be even more. The delta will likely increase, meaning that the holder of Stretch will have much more benefit to earn Stretch rather than treasuries or rather than any other debt-related vehicles. But again, I think the problem is that Bitcoin is still perceived as something very volatile, as something that the large majority of the population is completely unaware of. And so even if technically everything that we say, I deeply believe that is true, then there is the realization that the market is not ready. And so I think Saylor is doing an amazing job trying to every day spend majority of his time to speak with the mainstream media, to speak with the financial regulator, to speak with retail, to speak. I think he's the hardest working man on Bitcoin. And I think we should give this accomplishment to him, because it's really trying by himself and with his company to try to reshape the concept around Bitcoin and the new concept of digital credit. So I think it's like trying to give us the escape velocity of Bitcoin, and I think it's one of the biggest accomplishments that we need to acknowledge to him. And probably, yes, time will tell, but I'm pretty sure that Stretch is going to be probably a $10 billion instrument by the end of this year, and much bigger over the next years. It's pretty obvious.
And the last data point I wanted to comment on this is that this week, I think the prefers overtake the converts on the amount of money. So why would that be important? In my observation is because the converts still have this component of hedging. So people are using the convert, people who actually bought these converts years ago, they have an edge over strategy itself. So they can short it or long it according to how the price goes and how the converts are performing. So as long as these depth from the converts were high relative to MSTR, it have a bigger impact on the MSTR price. But now if you have this other side of the equation with the prefers, where the prefers are getting right now are almost the same, but let's say in 1 year, it would be double than the amount of the convert. So you get less impact on the convert debt on the MicroStrategy price or negative influence over it. What do you think about it?
Yeah, I think it actually was the next point I wanted to bring to light. So maybe I can share the screen, Fernando, very quickly.
Yes, I think you can stop sharing and...
Yes, because it's exactly what Diego pointed out. I think it's
that would be
important day.
Sorry for interruption. I think that would be amazing if STRC replaced SPY.
Coming soon, let's push.
Because I said Sailor was rejected multiple times, and sometimes they will come back and beg to strategy to be part of the SPY. I said many times, and this would be romantic, amazing. So
yeah, finger crossed, and still a lot of more work to be done. But the trajectory, it's I mean, I cannot say 100%, but I would say it's possible. So hopefully in some generation, those products will be so normalized in the financial market that we will be like the S&P index. Now, also a friend of mine that is not, into finance say, yeah, maybe I should buy this S&P index. Maybe they have no idea how it works. They have no idea how the mechanism is behind. They don't know exactly how it works, but it's framed in our mind that the S&P index is the benchmark. Maybe in 20, 30 years, it will be stretched, the new benchmark.
Yeah, this is what all the people, when they talk to people, to normal investors, to retail that they don't understand, they talk about the index like the holy grail of the investment. Like you put money there and you make money and nothing happens.
Also, it's something that we don't think too much here in Hong Kong because there is no taxes on this, but the stretch product, there is a technical word that I can't remember now, but effectively you can delay the taxes, right? So it's actually the tax defer system. So it has also tax benefits.
Of course.
Yeah, so coming back to the original point, Diego, I think here it's a tweet from Strategy in which, yes, for the first time, the total of the preferred offerings, which amounts of 8.36 billions, are larger than the convertible debt that equates to 8.21 billion. And I think Sailor stated multiple times that they want to retire completely all the convertible notes because of the problem that you mentioned before. If you have a large amount of convertible notes, and maybe a couple of years ago this was much bigger, it can easily suppress and shrink your share price into a certain range because of the arbitrage and because of the delta neutral players that want just to have a specific price and not try to over risk or to have additional risk on their positions. But as long as they create more balance sheet power via MSTR ATM and now with the preferred, the portion of the convertible notes will shrink over time and probably will become like very, very minimal or almost irrelevant by some of those convertible time, like in 2030 or 2031 or 2032, so that there will be less pressure on MSTR because those delta neutral player and those arbitrage won't be there anymore. And so the stock might start to run again. So the convert might seem very easy on one side because you can have money today, just buy Bitcoin, but it comes with some cost over your capital structure. Whereas with the preferred, this cost, it's almost minimal. You only have to pay dividend, but there is more aligned over the long-term game. So it's much better to have preferred rather than the converts.
Also, the stronger the prefers get over the converts, what is happening that is effectively the net leverage, that's the way that is mentioned on the strategy dashboard, is getting lower. Remember, a couple of months ago, this number was 15, 12, 11. Right now, it's 9. This is the effect of you are growing the part of the prefers that doesn't count as leverage, and then effectively reducing the debt amount. So in comparison with countries where you have this key metric, the one that we mentioned the other day, debt to GDP ratio.
Debt to GDP ratio.
So like Japan is at 250% debt to GDP. You can make some kind of analogy with this, right? Strategy, it's 9% to the GDP, let's call it. And they effectively have a mechanism to reduce this number while they are making the business stronger. So this is a mechanism that countries are going totally the opposite way, which show you that central banks are a Ponzi scheme, and strategy is totally the opposite. It is the leverage in the system while they are making more money and they grow in the company.
Yes, correct. They are reducing the risk. They are reducing the debt exposure because the convertible notes are technically more debt with a convertibility feature into equity, whereas the preferred are pure capital, are pure equity. So in their idea, by 2032 or even before, if the MSTR will run so that they can equitize those convertible notes, their idea is to have zero convertible debt, technically zero debt on the balance sheet, but still have like, I don't know, 70, 80, 100 billion or maybe more by 2030, probably will be higher than that, of pure capital, out of which you just need to be sure to be able to pay the dividend obligations. But yes, it will technically be a completely deleveraging situation and de-risking the company because you only have actual equity and actual capital. So I think this rotation into preferred will improve the MSTR over the long term and will de-risk the company. So for a new external investor, it should be like a very positive sign to see this rotation.
Right. So one of the posts that I was reading, they say that they will target 21 billion for the preferred during 2026. Do you think that is possible, or is there any other mechanism that where they can raise 21 more billion dollars during this year, which would be equivalent to, we can do some calculations, how much BTC, additional BTC that would be, right?
I mean, it seems to me quite a lot, and it seems to me that maybe the only option would be that they know something about maybe the policy of the central bank and and the like, and they expect really that they need to cut maybe even more than 100 basis points that we forecast before. So maybe, I don't know, if the Fed is forced somehow to, I don't know, push the interest rate to 1%, then the delta will be so massive, the delta will be a screaming buy, and so you will have like also large institutions that say, yeah, I don't want to buy short-term treasuries, or also the long-term curve of the US Treasury. It seems to be manufacturing. It seems to be like fake. So I just want to go more on those kind of instrument. So maybe in that scenario, I might see 21 billion, but would be almost 3x as of the amount that they have today. It seems to me very, very hard to reach. I would go probably with 10 billion, around 10 billion. I think it's more feasible, and it's still like doubling the amount that they have today, which seems to me like already a great target. But if they do 21 billion, I think it's yet another testimony that this new phase 3, let's say, of strategies is really working.
Yes, I think talking about the Fed, Trump wants to put the rates at 0. So it depends who is going to go to the Fed. I think that Trump is going to put one of his guys on the Fed that will respond directly to him, even though it's not possible to do that because Fed needs to be independent of the federal government. But with all the things that are happening now, with all the things that Trump is doing, we can expect anything.
That could be a very big impact on the how to call it, on the appealing of this product, right? Because you effectively you stretch the gap of stretch to make it even more attractive when the rate cuts keep coming. So yeah, I think that's pretty much all about stretch. Or do you have, Marco, anything else about this topic, or you want to change?
Yeah, maybe just one more observation on what we just said about the Fed, because the Fed can go and decide to put the short-term rate to 1%. Let's assume like this crazy drop over the next year to 3.5 to 1. The bond market will react very badly. It means that over the longer yield curve will be much higher, because they want to have a sort of compensation for this wrong move. So I think the only solution out of this kind of mess, it will be that the Fed needs to operate similarly to the Bank of Japan, in the sense that they need to kind of acquire almost the majority of the US Treasury, because otherwise the market would say, yeah, I need to ask you like, I don't know, 7%, and you cannot refinance $8 trillion in debt at 8%. It will be like kind of suicide. So I think it won't happen. So maybe Trump wants to have lower rates for the short term, and also forcing the hand on the Fed to buy majority of the new issuance of the US Treasury bills for refinancing of the next 2 years, because in 2 years they need to refinance more than 8 trillion. So, but again, it will be the first time in the US or in the Western hemisphere, apart from Japan, that we see this kind of behavior. And it would be for me a kind of shockwave for the financial markets in general, for the bond market in particular, and then also for the equity market, because it's everything connected. So I think he's playing with fire. And it will be very dangerous. And that's, for me, even more importantly to all Bitcoin, because Bitcoin is external to all of this mess. So
yeah.
Yes. So you wanted to talk about SATA from Strive.
Yeah, maybe we can also discuss quickly for SATA. So SATA, as we know, it's the younger brother of Stretch. It has been issued by Strive. I would say very similar mechanics, variable, short-term duration. Of course, they promise a higher yield, because of course Strive has less Bitcoin, is a smaller company, they don't have this balance sheet power of strategy. But finally, also SATA reached parity of $100. So Stretch was first, SATA was second one. Both of them reach parity, and so now also Strive can do similarly issuance of ATM on SATA to attract more capital and buy Bitcoin. So now we have two companies effectively in the US doing this mechanism. And also, I would like to ask you guys if you also, expect to see something similar out of Metaplanet, because I think also Metaplanet launched a couple of months ago one preferred offering with convertibility, so similar to Strike. And also, I think it was called Mars, which should be their own version of the Stretch and SATA. So if also in Japan they can run this playbook, we will have three companies. One is massive in strategy, one is medium size, let's say Metaplanet, one is hoping to become medium as Strive. So how do you see this pattern, and also on the Japanese side?
Yes, I think in the Metaplanet Mars, the Metaplanet Prefer, the yield was 5%, 5 or 6%. So it is lower. So that was one of the analyses that we take the other day. As they operate in this market with lower interest rates, they can make it even more, this engine of accumulation of Bitcoin, more powerful than even MicroStrategy, at least in terms of yield generation, not in terms of volume, because that it's more attached to the influence from Wall Street compared to the ones in Japan. But still, if the yields achievable in Japan are bigger because of that, lower interest rate, my dividends are also not, I don't need to pay you 11, but with the 6%, it could be a great product in Japan where they have bank accounts paying literally zero or negative. So that I think is going to be a big thing in this year. But yesterday I heard you ask the question to Andrew from Smarter Web and if they can do that in the UK, and he wasn't that interested.
Yeah, I think we can talk about that because I talked with Andrew Webley yesterday from the Smarter Web company, and Smarter Web company is going to be listed on London Stock Exchange. Just remember that the Smarter Web company now belongs to Equis. Is like a secondary market that is not the London Stock Exchange, and they were approved for the London Stock Exchange. It's supposed to be about a vote for the shareholders on the 28th of January, and if this is approved, they will start in the main panel of the London Stock Exchange on the Friday, 3rd of February 2026. And of course, when they are listed on such a big stock exchange, they have access to other instruments. For example, indexes, they will go into indexes. And I think they can issue this kind of instruments, but Andrew is not interested on that. So
no, it looked to me like he wasn't interested in that, or maybe they have other fights before getting to that level. I think that was the point. The company is still not that big as to produce this kind of instrument, so they have to go step by step. First, you move from one exchange that is a smaller one into the big one. Yes. Then you grow on the big, in the London Stock Exchange, which is the biggest one. Once your company reach levels of billions again, maybe they can still start thinking about issuing this kind of instrument.
Yes, I think they are now focusing growing the company. In fact, they did an amazing job. I think that not even, it was listed in Equis 9 months ago.
It's less than a year ago.
It's less than a year ago.
They go from a private company into $1 billion company.
But not even a private company. That's the good thing that I like from Smarter Web company. It's not even a private company. It's a family business. So this is the power. That's what, when we talk about Smarter Web company, we must show to the people the power of Bitcoin. Smarter Web company was a profitable family business based on web design. Was not strategy, was not MetaPlanet, that was already a listed company operating hotels, was not 21, that is backed by Jack Mollers, was not Capital B, that was already a company listed on France. When I talked to Andrew here in Hong Kong, he explained me all the process. He's a Bitcoiner, and was crazy how they found this loophole to enter to a financial market and get money to put into Bitcoin and become a Bitcoin treasury company. So they went from a family business to get listed on London Stock Exchange in 9 months.
Yeah, less than 1 year.
Less than 1 year. And usually, and also in the middle, to a billion-dollar company, to a unicorn.
And in the worst timing for Bitcoin, right?
In the bear market of Bitcoin.
The point also that we have to make, it's all these achievements, strategy, keep raising money at the pace of billions per week. MetaPlanet, Capital V, Smarter Web, and all the other ones, that they been able to do this growing of the companies even on a time that is the worst sentiment for Bitcoin. And with Bitcoin going down effectively from 126 to 80. So just in period of stability of 2 weeks that were the previous week where Bitcoin went from 88 to 95. This lasted only 2 weeks until we crash again. And in that time, strategy raised, I think, $3 billion. So imagine what will happen when we have one of these crazy bull runs from 100K to 150 in a short period of time, the amount of money all these companies will start getting is going to be insane. Plus, what they already have, which is the basic point that Saylor was trying to make to Danny on that podcast, is that at the end of the day, it doesn't even matter if you follow this strategy of looking for Bitcoin yield. You can still be a good company, good Bitcoin company, but just holding Bitcoin.
Yeah.
And maybe not even having, because the argument was, well, what happened with companies that they don't have a core business? It looks like just a grab of money to screw investors. And sailors say, well, not everybody is the same. Not everybody have the same possibilities. Mm-hmm. So if you're a struggling company and your only method of survival is Bitcoin, why is it bad?
100%. And let's come back to the Smarter Web company. They become a unicorn, a $1 billion company in a few months just by adopting a Bitcoin treasury strategy. In the past, when we were talking with Diego about the unicorns and how to become a unicorn, the unicorn status was only reserved for tech companies. You need to have an idea and reach 1 billion users, whatever, and you become a unicorn. And many of these unicorns were failures, like WeWork, for example. Now you took a family business to a unicorn in few months using a Bitcoin treasury strategy. So that is the power that investors, the dinosaurs, still don't see on that. And Andrew was talking about the same. They were able to do this in a period when Bitcoin was almost flat. And in my opinion, last year, and I think you agree with that, Bitcoin was a bear market in terms of gold. And they were able to do that. Imagine when Bitcoin started going up. Andrew was telling that for the treasury companies, the best way is to Bitcoin go up gradually, not like super fast. Because if they go up gradually, they can manage this stability is not the word, but like a balance between raising capital and buying Bitcoin at a good price. If the Bitcoin goes up very fast, they can raise capital, but they cannot buy Bitcoin at a good price. Anyways, if you look for the future, any price is good for Bitcoin. So I don't understand why the genius of Wall Street still don't understand that.
It takes time.
Yeah, and maybe one more point about all the preferred offerings. I think Saylor really thought deeply since 2022 because he undergo a severe bear market. He undergo almost all the kind of claiming of liquidation of now the MNAV is below, it's 0.8. So how can you restore the MNAV, liquidation price, blah, blah, blah. So I think he really thought deeply, how can I have an instrument that allows me to run the company, to raise more capital in a completely uncorrelated way to Bitcoin, even under a bear market? And he realized that probably the preferred offerings for him, at least, is the best way to still keep the engine on. And now maybe even not only on, but like also change gear, make like a higher gear and try to go even faster, so that he has the potentiality of going very hard on MSTR ATM if the premium go back to 2 or even more. But at the same time, if the premium is compressed to 1, now he has a new level, a new kind of instruments that can still be very performing even in bear markets, which was completely impossible for strategy back in 2021 or 2022 or even 2023. So I think now he can kind of exploit this arbitrage on both scenario. On bull market, it's easy or easier. On chop consolidation, in phase of consolidation, it's a blended version of the two. But now, even if we still go into this kind of bear market with the preferred, the engine is still on, is still working. So I think he has this kind of perfect machine that can work in all type of scenarios, especially in bear market, because it was the largest, most controversial topic against strategy. Now we enter a bear market, now what? And it's proven to the world now that he has a very solid instrument to still run.
You know, the way I understand this design made by Saylor, this came from engineering. So I'm also an aeronautical engineer, same as Saylor. So I think I got it without even he explaining it the way it is. But think about this analogy. When we design airplanes, we design them for the extreme conditions, storms, or even if one of your engines goes down, the airplane still have to be able to land with one engine. So an analogy with the bear market is this. Saylor was thinking, well, I have this airplane, it has two engines, it works very well when the MNAV is positive. What will happen with my MNAV compressed to one and I lose one engine? Can I still run this engine, this machine, with some other instruments on the airplane? So that's why they come up with this preferred stock, which effectively allow them to run the airplane even with one engine or in the middle of the storm.
Yes, totally agree on that. He's an engineer. That's the point. And an engineer always thinks the worst case scenario for everything.
Yeah.
So what else do we have?
Maybe, guys, let's close with Stick and Shake, with the latest news about this food chain in the US, because it seems to me pretty interesting. So let me...
Yeah, they bought 10 million on Bitcoin.
So actually, Stick and Shake, which is... yeah, I think they have more than 10 million now in Bitcoin reserve for their own company. It's a food chain, pretty big in the US. They announced probably half a year ago this Bitcoin strategy in a very healthy way, meaning that they're already very profitable company, very well-known brand in the US, and they just decide to allocate portion of their reserve to Bitcoin. And then slowly after time, they decided to implement new stuff related to Bitcoin, such as receiving payments in Bitcoin. So I think in all the shops, you can buy your burger and pay with Lightning, paying with Bitcoin the bill. And now they also announced that for all the employees of the company, I don't know exactly how many employees, maybe we can double check, but the point is they will give bonuses paid in Bitcoin to all the employees of the company. So it's they try in their own profitable business to run this circular economy on Bitcoin, in which you have reserve in Bitcoin, accept payment in Bitcoin, and pay portion of the salary in Bitcoin. I think it's very positive, it's very good, and I would love to see many more chains in the US, in Europe, in globally, to start to do this, because you can have communication with retail, you can have a big marketing story behind you, and it will be like a very positive flywheel for your business, for your economy, and will be much appreciated to see larger chains. So I don't know, guys, what you think about it, but I think it's pretty cool to see a real application.
I wonder how much of the total revenue of the company is actually coming from Bitcoin payments. I guess it's not that much, but it would be an interesting metric to have in a business like that. Okay, this is, I don't know if it is a franchise or something like that, I guess, where with this classic business model of food, you get, let's say, 1% of your revenue is coming from Bitcoin payments. So can you extrapolate something like that to other business models, traditional business models? So I would be interested to know.
Yes, it is. I think so. Yeah, but yeah, I think that it's good. At the end of the day, we have a point with the circular economies. I support, because we talk a lot about circular economies with people from Latin America and Africa. I support this, but it's not going to be the tool that will boost the hyper-Bitcoinization. The hyper-Bitcoinization will come from the treasury companies, from the capital, the big capital, and the big institutional capital, because I like to repeat this. The hyper-Bitcoinization is going to be reached when everyone uses Bitcoin without thinking, without even knowing that they are using Bitcoin. So that's the goal. But on the other side, I like this because it's another way to orange pill people. You have your employees and you give them the bonus in Bitcoin. It's a good way to start orange pilling them. If you teach them about self-custody, about what Bitcoin is, how to protect your wealth to Bitcoin, probably they will receive a few portion of the salary in Bitcoin, but they will be incentivized to buy Bitcoin, to study Bitcoin. And at the end of the day, this is good for Bitcoin. And on the other side, when the bear market comes, the crypto bros can go, instead of going to work in McDonald's like the meme, they can go to work to Steak and Shake.
Yes. And I think, it's a very powerful tool because it costs you literally nothing, almost nothing. You can have still the normal traditional people that goes to your place. They can still pay with their credit card. They can still pay with dollars, no problem. But you might attract millions of Bitcoiners because now maybe if I would have been in the US, why going to Burger King or another chain? I might go there. Maybe the product is even better. They accept Bitcoin. They are on the right side of the financial story here. So I think it's a very powerful tool, almost for free, and it attracts millions of potential customers, and it's fundamentally much solid for your balance sheet. So I think it's a win-win strategy for everybody. And I will be surprised if this is the only company, food chain company doing this. I would expect many others to follow because it's working. It's an amazing tool. It's there for free, so just do it.
Yeah, I'm sure there are many. In fact, here in Hong Kong, we have a cafe in Central Market, but at the scale of Steak and Shake, I don't think so.
One of the objections we got when we were in Argentina about these merchants adopting Bitcoin as payment was this. Maybe this is a problem of a third world country, but it's valid, which is someone came from the Bitcoin community to try to orange peel a merchant selling a small burger job, let's say, in Buenos Aires. And the guy give all the tech instruments for them to collect payments with the Lightning Network. First complaint is, well, I don't have many customers actually paying me with this, so it's something that I use once every 2 weeks. And even when I use it, my problem is that I need to sell this Bitcoin to pay to my suppliers tomorrow. So you see, it's not useful in the terms when you have a small business where you need the cash flow to actually move fast, unless you actually have a business that you can hold the Bitcoin on the balance sheet without the need to pay for, otherwise you become like the old days miners where they just mine Bitcoin to sell it to pay for the electricity bill. So in that sense, they were in this loop where they were barely profitable and they never hold any Bitcoin. So this small business were having this problem. First, adoption. Second one, even if they will have, they cannot hold the Bitcoin. So it's a constant buy and sell. So it's not kind of useful for anybody.
Yeah, I agree. But for larger chain, already very profitable with thousands of potential customers or millions of potential customers with larger balance sheet. I think it's I would target medium to big players. It will become viral on Twitter. It will become viral on social media. You will have a lot of buzz around it. So I think it's for the cost. It's a no-brainer for me to implement. Still keep the same method payments that you have before. You don't need to become orange or change your marketing structure or change your logo. No, it's just a side application that you can have, and the marketing will do it by itself. So I think it's I want to see more, because I think as Fernando said, the hyper Bitcoinization will be multifaceted. So you will have so many different angles. each one needs to bring their own vision to it and their own work to it. And so yes, there will be more strategies, more normal company, Bitcoin banks, chain like this one adopting Bitcoin, retail. So it needs to be like an organic adoption from many layers.
Correct.
Yes, and let's point the last thing that we were talking before the show. We need to think how much Bitcoin is strategy gonna hold by the end of the year. What do you think?
Tough. I go first?
Yes.
So I think right now they have 700,000, maybe some thousand more. So let's say 700,000. We still have 50 more weeks. I wouldn't be surprised if they can raise on average probably 5,000 Bitcoin per week. So let me do quickly the math. Very, easy and dirty. So 50 weeks, 5,000 will be 250. I would say between 950,000 to 1 million by the end of 2026.
You are bullish, more bullish than myself. So my number was 168,000 Bitcoin, additional Bitcoins, which bring that number into 800, maybe close to 900,000 Bitcoin, but not the million. A million Bitcoin will take a lot more effort. In my calculation, 168,000 additional Bitcoin, if they can achieve this, at an average price of, let's say, 125K for the next for this year, it will require like $21 billion dollars. So that's the core idea. But no, 1 million for this year, I don't see it for sure in 2027.
I think 1 million. Yeah, between 900 and 1 million.
Always too bullish, sure. Fernando.
Huh?
I'm like
Samson Mao. So, but yes, I think that I'm bullish. I'm super bullish on Bitcoin. Not only about the price, I'm super bullish with all the things that Bitcoin is gonna, all the paradigms Bitcoin is gonna shift. So that's why I'm bullish. And of course, the price is it's a circumstance. It's like today is 90K. For sure, we are undervalued. Probably somewhere on the year, we are going to be overvalued. But at the end of the day, you don't have to watch the price. Bitcoin is the biggest asset ever created, is the biggest technology ever created, is the safest asset, and it's one of, and again, it's a living organism that is not going to stop. You can try to stop it. You can try to ban it. You can try to destroy it, and we'll never go back.
But for those who are inside Bitcoin for many years, that's true. The thing is that for the newbies or the newcomers into Bitcoin, the price is the best marketing department that Bitcoin have. So that's why somehow, we actually do care that the price move in the direction that it has been moving for 15 years without many surprises. So not much about the levels that it can reach, but I think what scares people is the volatility still. They don't understand the thing about 126K 100 days ago, now later 90. That's what scares people more than the price itself, because nobody actually, from someone from that side, they don't even know if the price was 90, 60, 35, or 2. It's not the actual nominal value. It's the volatility what scares people off Bitcoin. So if we can keep the uptrend and maybe make many more all-time highs that go into the mainstream media as news, that's the best market department for adoption of newcomers.
I think so. So Marco, any plans to come to Hong Kong?
Yeah, we need to discuss it. Maybe in March or April. If you guys be, I will to meet you there. So yeah, we can for sure we will.
If you come in middle March, probably can be a super Omega candle because Pitchball is coming. We have a friend that we have the theory that when he comes to Hong Kong, Bitcoin reaches all-time high. But
he says if Marco comes,
if
double gold candle.
If Marco comes, if Pitchball comes, we can have an Omega candle.
A God evil candle.
So let's see.
Amazing. So yeah, I need to buy the ticket.
Of course. Let me make an announcement. I was invited to speak at the Bitcoin and Treasury and Conference in Bristol, the UK. It's going to be on the 29th of May of this year, and everyone can buy the tickets at smarterweb.uk. If you put the code Bitcoin, you get 10% discount. So I'm super excited on that opportunity because we are gonna be meeting more people of the space. We are gonna be learning a lot from good names of the space and hope to see many of the audience there too.
Yeah, congrats, guys. I mean, it's a big accomplishment. You deserved it, and you did a great job also in letting the public know about the smart web company and do all this, this segment that we do together and all the other effort that you do. So very well deserved, enjoyed it, and yeah, try to connect as much as possible with big minds. I saw some very good speaker over there, so I think it will be like a very interesting event. So very cool.
Yeah, it's coming. Of course, Andrew's speaking. How is the name of the guy? Croxroad, the Bitcoin Treasury strategist of
Jesse
Smart
Myers,
Company.
I think.
Jesse Myers is speaking. Alexandre Laisset is going to be there also. The Stripe CEO, many good names of the industry. So yeah, we are planning to do good connections, and in the time from here to the conference, I will invite some of them to the stream. So yeah, I think that from our point, what we can do is try to keep educating the masses to not be afraid of the price. Don't be scared of volatility. Volatility is here. You need to speak to the people that you need to think Bitcoin in a medium term or long term investment. The feedback that we have, because now we are doing a streaming in Spanish, and most of the people, they ask, how much is going to be Bitcoin next week? This is the common question. So we need to keep fighting to change this mindset. So it's hard, but we are going to make it. So Marco, thank you for being here, and tell our audience how's your social media.
Yeah, thank you guys. It was a very nice episode, so very cool. My social media is mainly on X at Batistoshi93, so you can find me there.
Excellent. So let's meet next week. Let's arrange if it's Tuesday or Thursday, but we are going to have an episode every week now, especially that Marco is in our same time zone. Guys, thank you for being here. See you next week, and thank you to everyone who is on the other side. If you like the episode, give us a like, subscribe to our channel, follow us on social media, Marco as well, because doing so, you help us in our mission of painting the world orange. See you in the next episode. Take care, and we are all Satoshi.
See you.